Bitcoin is on the rise. The digital gold is shining brighter than ever. Optimism permeates the market. Yet, this bull market is different. The rules of the game are changing. This time, it's not just about the price. It's about a fundamental shift in the market. Institutions are entering the arena. They are recognizing Bitcoin's potential. This new era brings both opportunities and challenges. The old adage still rings true: do your own research. Understanding these new dynamics is key. Knowledge is power, especially in the volatile world of Bitcoin. A fascinating dance is playing out in the Bitcoin market. Individual investors, early adopters, are taking profits. They are cashing in on the remarkable gains. This is a natural part of market cycles. Waiting in the wings are institutions. Hedge funds, corporations, even governments are accumulating Bitcoin. They are buying the dips, absorbing the supply. This shift in ownership has profound implications. Liquidity is being reduced. Price volatility might decrease. This could lead to a more stable, mature market. However, it also raises concerns about accessibility for smaller investors. The $100,000 mark for Bitcoin is not just a number, it's a psychological barrier. It's a siren call for profit-taking among retail investors. Many entered the market years ago. They saw Bitcoin as a high-risk, high-reward gamble. Now, they are being presented with life-changing profits. The temptation to cash out is strong. This creates selling pressure. However, it's important to remember that every sale is also a buying opportunity. Institutions are waiting to accumulate more Bitcoin. They have a longer-term perspective. This dynamic interplay between retail and institutional investors will continue to shape the market. The current Bitcoin bull market is not the first rodeo. It echoes previous cycles, yet it dances to its own tune. In 2017, the market was driven by hype and speculation. Retail investors fueled the frenzy. This time, the fundamentals are stronger. Institutional adoption is providing a solid foundation. Moreover, the macroeconomic landscape is vastly different. Governments worldwide are grappling with unprecedented debt levels. Inflation is rearing its ugly head. This creates a perfect storm for Bitcoin's value proposition as a hedge against economic uncertainty. Section 5. The invisible hand of macroeconomics. Bitcoin does not exist in a vacuum. It is influenced by global forces. Fiscal policies like tax cuts or tariffs can impact its price. These policies affect economic growth and investment sentiment. For instance, tax cuts can incentivize investment in risk assets like Bitcoin. Conversely, restrictive regulations could dampen enthusiasm. It is crucial to monitor these macroeconomic trends. Understanding the interplay between fiscal policies and Bitcoin can provide valuable insights. This knowledge empowers investors to make informed decisions. Section 6. Institutions at the helm. The influx of institutions is changing the very DNA of the Bitcoin market. These players operate differently from retail investors. They have deeper pockets and longer time horizons. Their trading strategies are more sophisticated. This institutional involvement is likely to dampen volatility. It can lead to more predictable price movements. However, it also raises concerns about market manipulation. Transparency and regulatory oversight are crucial. They ensure a fair and efficient market for all participants. This is an ongoing discussion in the Bitcoin community. Section 7. Bitcoin and the global money dance. Bitcoin's price is not just about supply and demand, it's also about its relationship with the global money supply. As central banks print more fiat currency, the value of Bitcoin, a scarce digital asset, tends to rise. This correlation is becoming increasingly apparent. As governments grapple with debt and inflation, they often resort to printing more money. This devalues fiat currencies and pushes investors towards alternative assets like Bitcoin. Understanding this relationship is key to comprehending Bitcoin's long-term potential. It underscores its value proposition as a hedge against monetary debasement. Section 8. Navigating the Bitcoin seas. The Bitcoin market is not for the faint of heart. It is volatile, unpredictable, and constantly evolving. Yet, it offers immense opportunities for those willing to brave the storm. The key is to approach it with a clear strategy. First, do your own research. Understand the technology, the market dynamics, and the risks involved. Second, diversify your portfolio. Don't put all your eggs in one basket. Finally, be patient. Bitcoin rewards those who have a long-term perspective. Section 9. A new era of financial sovereignty. Bitcoin represents more than just an investment. It embodies a paradigm shift. It is a decentralized, censorship-resistant system. It empowers individuals and challenges the status quo. It offers a glimpse into a future where financial control resides with the individual, not institutions or governments. This is a powerful narrative that resonates with millions worldwide. As we enter this new era of Bitcoin, one thing is certain. The future of finance is being written in code, and it's open source. Please hit the like button and subscribe to our channel for more updates.